Welcome to the Pro Ticker Deep Dive. So today we are digging into one of the most explosive, maybe most polarizing stocks on the market, Palantir Technologies, ticker PLLTR.
That's the one.
The stock's been on this blistering, over 100% rally, and it's triggered this huge question on every trading desk, right?
Yeah.
Is Palantir actually on a path to become like the next $2 trillion tech giant?
Oh.
Or has the hype just completely outrun the reality of the situation?
It's an amazing question, and it's amazing precisely because of the numbers we're talking about. I mean, right now, Palantir's market cap is hovering around, $370 billion?
$370 billion.
And that surge is coming from a huge internal transformation, these massive AI contracts, and yeah, a lot of viral investor excitement. But you just can't talk about this without hitting the elephant in the room.
The valuation.
It's valuation metrics.
Yeah.
Their price-to-earnings ratio is well north of 370 times.
A PE over 370, and that's almost unheard of outside of like a peak bubble. So, okay, what's the plan for this deep dive? We need to figure out what results could possibly justify that kind of price.
Right. So our mission is kind of twofold. First, we'll unpack the hard numbers that are actually supporting this rally. We'll look at the growth drivers, both in government and commercial.
Okay.
But then we have to weigh the bullish side. The momentum is undeniable against the very real, very significant risks. That's the classic high-stakes debate here. We need to figure out what the market thinks it sees. And if we zoom out for a second, Palantir's rise isn't just about their software. It's about these massive macro currents. It's fueled by really two huge trends shaping the whole economy.
Right.
The first is the unstoppable march of AI into enterprise and defense. And the second, and this is so key to their whole story, is the global race to digitize and secure critical infrastructure in a world that feels more and more volatile.
And Palantir has planted itself right in the middle of that very lucrative, very sensitive sweet spot. They're working with Western governments, key defense agencies, huge healthcare systems like the NHS in the UK.
We have Fortune 500.
And massive Fortune 500s, yeah. They're deploying their main platforms, Foundry, and their artificial intelligence platform, AIP, right into these mission-critical operations.
They absolutely are. And this is where that geopolitical context really matters. They've built this whole identity around security and operational stability. They even confidently call themselves the, quote, anti-woke alternative to some of the other big tech firms.
Which is not just talk, right?
It's not just rhetoric. No,
Oh, yeah.
It translates into sticky long-term government contracts because they're seen as a trusted partner, someone aligned with Western defense and security goals.
That makes the government side super dependable. But the real explosion, the thing that's getting everyone's attention, is happening on the commercial side.
Yeah.
Let's get into the Q3 2025 numbers, because those results just shattered all expectations.
They really did. Palantir hit record levels across the board. Total Q3 revenue came in at $1.18 billion.
Okay.
That's a 63% jump year over year. But the real headline, the number that really sparked this whole rally, was the U.S. commercial revenue. It just soared, up 121% year over year.
121% surge just in U.S. commercial. That is wild.
Yeah.
But let's be real. How much of that is just pulling forward demand? Can they possibly keep up that kind of triple-digit growth without just crushing their margins?
That is the core tension. It really is. But if you look at their tech, the bulls would argue that the growth is built on this really scalable foundation. You mentioned Foundry and AIP.
Yeah.
Think of Foundry as the central nervous system. It's the secure data control system.
Okay.
It cleans, integrates, and governs all the proprietary data inside a huge company or government agency.
Okay, so the foundation is clean, secure data. Where does the AI hyper-acceleration come from?
Yeah.
That's AIP, the artificial intelligence platform. AIP is the operational layer that lets people who aren't coders just instantly deploy really sophisticated AI solutions.
Okay, so it's user-friendly.
It's more than that. What makes it so unique is that it can operationalize multiple large language models, like OpenAI's GPT or others, but it runs them on the customer's own private, secure data inside Foundry. That capability is what almost no one else offers. It lets an executive run complex AI queries without writing a single line of code. It's a super rapid deployment tool.
That explains the speed. And it's not just revenue, it's profitability that's also surprising people.
Exactly. Despite all this investment in scaling up, their adjusted operating margin hit a record 51% in Q3. Gross margins are holding at an amazing 80%.
80%, wow.
And they booked $2.8 billion in contract value in Q3 alone. Their remaining deal value is now at a whopping $8.6 billion. This ability to turn demand into scalable, high-margin revenue is the entire foundation for that $2 trillion bull thesis.
And it's not just theoretical, it's translating into huge deals. They closed, what, 204 deals over $1 million in Q3 alone? These are scaled deployments, not just little pilot programs.
And they're showing incredible stickiness, too. Look at the UK's NHS. Palantir is enabling their digital transformation. They're handling massive data sets to improve everything from vaccine distribution to just optimizing hospital beds.
That's national infrastructure.
It's mission critical.
Hmm.
And it's the same story with Boeing's defense operations or their big alliances with giants like PwC UK and Lumen. Lumen has that $200 million Edge partnership. These are multi-year, multi-million-dollar deals that just lock in revenue for years to come.
Okay, so we have this undeniable high-margin growth. It's fueled by what is arguably best-in-class, rapid deployment AI software. But now we have to pivot. We have to look at the skeptical view because this is where the debate gets really fierce. Let's talk about the financial gravity of this.
We have to.
We mentioned the PE, but let's talk sales multiples.
We must. Because despite all that incredible growth, the stock is trading at 85 times expected sales.
85.
To give you some context, that is the highest multiple in the entire S&P 500 index. A valuation that high basically demands not just growth, but perfect, flawless execution for, like, the next 5 to 10 years.
And Wall Street skepticism really reflects that disconnect. Despite this massive rally and the blockbuster numbers, the consensus rating from analysts is still just a cautious hold.
That is the ultimate sign of anxiety, isn't it? Analysts have raised their price targets, sure. They're now in this huge range between like 155 and 255.
Yeah, it's a wide range.
It's a huge range. It reflects the volatility. But the overall conviction to say strong buy just isn't there yet. The skeptics warn that even if Palantir's valuation got cut by 65%, which would be a disaster for shareholders, it would still trade at multiples that dominate the index. That suggests there's some severe froth here.
And on top of that institutional caution, you have the fact that insiders have started selling shares as the stock gets near these record highs. Is that just people taking profits, or is that a major red flag?
It's always interpreted as both, of course, but the market often sees it as a subtle warning. Especially when volatility is this high, when a stock is priced for perfection and the people who know the company best are, taking some chips off the table, it just adds another layer of risk.
Okay, let's try to synthesize this. We have the bulls saying the fundamentals justify the premium, and the bears saying no amount of growth can sustain this valuation. Let's start with the bull case. Why does this run continue?
The main bull argument rests entirely on the operational scalability of AIP. That relentless pace of deal-making, over $200 million contracts in one quarter, and the surge in commercial value, especially that 21% U.S. growth, it all suggests they've finally cracked the code for a repeatable sales motion.
And if they can keep those 80% gross margins, then the free cash flow and profitability should just accelerate like crazy. And that compounding acceleration is what bulls are betting on to eventually grow into this valuation.
Right. Now, on the other side, the bearish scenario. It really focuses on dependency and risk. Palantir is heavily reliant on these huge, big-ticket government and Fortune 500 contracts.
Yep.
So a slowdown in procurement, maybe from government budget cuts, or even just a CEO change at a big client, that could be a major downside catalyst because their revenue is so concentrated.
And they also face the risk of their margins shrinking, which would be fatal to this whole premium valuation thesis.
Absolutely. Management themselves recently warned that hiring, which they need to do to fuel growth, might pressure future margins. If they have to ramp up spending on sales and engineering to keep that 50-60% growth rate going, those fantastic 80% gross margins we talked about could shrink. And that undermines the whole argument for the current price.
Before we wrap, we should probably look at the technicals, the stock chart, because the way PLTR trades really reflects this intense debate.
It really does. Technical analysts are very cautious right now. The stock broke above that prior resistance near 207, but it's already pulled back below its 100-day moving average.
Which tells you what?
It tells us that the big institutions are nervous about sustaining this momentum, even with some positive signs like a recent MACD crossover. The stock is just It's trading in very high altitude territory.
There's a lot of air underneath it.
A lot of air, exactly. Look at the support levels. Solid technical support is way, way lower, down near $65. That illustrates the massive gap beneath the current price. And volatility is still extremely high. The average 20-day swing is almost $10.
Wow.
It tells you that if sentiment suddenly shifts, a swift, dramatic correction is very possible. The market is pricing in total confidence, but the chart looks fragile.
So what does this all mean for you, the listener? Palantir is without a doubt executing brilliantly. They're riding the AI wave and they're translating their unique tech AIP into extraordinary financial performance.
They are. The performance is there, but the valuation has stretched into, I think we can call it, unprecedented territory, well above even historic tech bubble highs. So investors are facing a classic high-stakes risk-reward dilemma. It's really just a bet on sustained perfection.
So the next few quarters are going to be absolutely critical. The market has already priced Palantir like it's a $2 trillion company. The question now is whether the company can consistently translate those huge contracts into sustainable margins and growing cash flow fast enough to catch up to its own stock price. For now, it really is the ultimate cult, stock prized by believers, scrutinized by skeptics, and right at the center of the entire AI debate. See you all in the next PoTicker Deep Dive.